Good morning, Mr. and Mrs. Ark. My name is Dwight Saltz. I have prepared your federal tax return for 2023, and I would now like to spend a few minutes to go over this return with you. Just to jump ahead a little bit, you are getting a tax refund, and so you do not owe. So let's switch over to the tax return here and take a look. Let's see. This is Form 8879. This is where you authorize me to file your tax return, your federal return electronically. So if you guys would sign this here at the bottom, the signature slots right in here, and then I can file your tax return electronically. Another thing is, if you will provide me with your routing number and your bank account number, I will get this set up to where your refund is direct deposited, and that way you'll get your money just a little bit faster. Okay, so let's go over the basic tax return, starting with Form 1040, and then we'll look at some of the other forms, and then I need both of you to sign and date the return after we go through it a little bit. First thing is right here, this $32,000 is total income from W-2s. That's Joan's salary. Now her gross salary was about $10,000 more than this, but almost, well, $9,900 or so was deferred from her paycheck, and so that's not taxable yet. That comes later when you retire and withdraw the retirement funds. So $32,000 of that amount is taxable. So if you looking on the 1040, let's just go down the list. The next thing is you had a little bit of interest from Schedule B. You had $1,955 worth of interest. Okay, so let's go on down. Schedule D, some capital gains. You sold some stock, and the proceeds from your sale of the stocks, you had $11,600 gain, but you had a capital loss carry forward from the prior year, which reduced it by $1,100, and so your capital gain, which is taxed at a lower rate, is $11,310. You had some additional income from two other sources. You had the business, which the ARC, that's shown here on Schedule 1, which is additional income. You got $36,950. Then you got some real estate income from the condo, and those go on Schedule 1. So let's look at these a minute. This Schedule C is the profit and loss from business, and this is the pet store. So we're showing we're showing gross receipts of $150,500. You had some cost of goods sold. You had insurance. You had professional services. You had some rent. You got taxes and license. You had some meals. You had wages. And the net bottom line is that your profit or loss from your business was $36,950, which is on the Schedule 1. And then on your real estate, that goes on Schedule E. So let's look at Schedule E a second. On Schedule E, you had rents of $16,600, but by the time you take away your interest, your repairs, your taxes. You had quite a bit of depreciation expense that you were able to take. You got most of the appliances and stuff you bought on the for the condo. You depreciated most of that, and your total expenses. And so your net income from your real estate was $2,589. Okay, and from your business, since you don't have any taxes taken out of a paycheck, you have self-employment tax. And so your self-employment tax, the calculation is on Schedule SE, which is here. And your self-employment tax is $5,221, but then you get a deduction for half of that amount back, which is this Schedule SE, and then here's Schedule 2, showing you the $5,221 of self-employment tax, but then you get half of that accredited back for that. Jumping down on the 1040, let's go down to, all right, let's see, we've gone through additional income from Schedule C. You got the business income, and you've come up with this adjusted gross income, or AGI. Then we try to look at the things that you might be able to take itemized deductions for, and that goes on Schedule A. So let's take a look at Schedule A just a second. On Schedule A is where you report things like mortgage interest, your medical expenses, taxes that you paid, gifts to charity, and you didn't have enough medical expenses. Your medical expenses have to exceed 7.5% of your adjusted gross income before you can deduct them, and we didn't come anywhere close to that. The taxes you pay, these are your sales taxes and property taxes. Your mortgage interest was almost $10,000. That would have been a deduction. You made gifts in cash to your church, $5,200. And when you add all that up, it comes to $24,052. However, we took the standard deduction because the standard deduction is $27,700. So you didn't have quite enough to itemize, but you came out better. It was the better choice was to not itemize and take the standard deduction. Okay, so that was Schedule A. You see, it came up 24,000, just a little bit shy of meeting the threshold for itemized deductions. Now, on this, this is Schedule 1. Okay, and also for your pet store, you get what they call is a QBI, or a qualified business income deduction. And so we got a deduction, a QBI deduction of $6,868, which is reflected right here on the tax return. Okay, and so you get through all this, and you come down to the bottom line, and your taxable income was $42,625. But then we get some credits off of that, and then you paid some taxes in. You get some credits, you get some child care credits for the daycare, where you paid $7,300 to Roundup Daycare Center. And then you get some other tax credits for children under the age of 17. So all that is reflected on page 2 of the 1040. In here in your tax credits. And it comes down to the bottom line is the amount of tax that you owe for this year, or for 2023, is $5,221. However, you paid in quite a bit more than that. From Jones W-2, there was $5,300 withheld. And then for the business, you paid in $4,100 in estimated tax payments. You got you add all that in, and then you so that reduces your tax liability, and then you got your additional credits for the child care and all that. And when you come down to it, you paid in $10,874, but you only owed $5,221. So your net refund is going to be $5,653. So you might want to keep give me your routing number and your bank account number, and then you want to keep an eye on your checking account to see when that payment actually hits your account. So I believe that's about it. If you'll give me that bank account number, you did you got a little bit of credit for a foreign tax credit for off of the sale of some of your stocks and stuff. And then this is there's a form for the depreciation on the rental property and that kind of stuff. So that's about it. So we'll get this thing filed. I'll give you a copy of an invoice for my services, and then you get all your stuff back, and we appreciate your business. So we'll talk to you soon, and we'll see you next year when you get your redundant done. Okay, thanks.